Good morning. I hope you guys can see this well. This is my first time using the green backdrop setting in Zoom. I'm actually using Zoom as a picture-in-picture with my OBS. Hope it comes out fine. I think there's a slight delay. I can see it. I'm actually, when you see me looking up, I'm looking at my other screen on top. But my main screen, that's the ones that's recording right now. Interesting read this morning. Woke up. One of the first thing. It's almost like Warren Buffett. Obviously, his words are golden. Few things. He repositioned his investments. He cashed out on a few of the larger institutions, such the banks. Not surprising, considering that low interest rates, and I think because, in my opinion, there's going to be a lot of foreclosures coming in the next year or so. As people, I know the government is throwing money into the economy, but I don't think that's sufficient enough to withhold mortgages, especially commercial loans. I'm not sure if all the banks that he was dealing with has any if they touch commercial. Probably most of them do. I know JP Morgan Chase does. But in any case, he bought into Verizon and Chevron, Marsh and McLennan. I'm not even sure what that is. I have to actually look that up. So with Warren Buffett's positions right now, let's see what this is. Marsh and McLennan is a global professional service firm headquartered in New York City business with insurance brokerage. Okay, so I guess they resell insurance, their brokerage. Is that similar to Geico? I'm not even sure. But I will have to do the math with Verizon to see why his pick for Verizon in such a strong position. Let's just see the 5 years. Let's see the max. It's a steady growth. Let's look at the full details of Verizon. So what I was saying is that he is indirectly predicting a crash based on Wall Street's formula of calculating, calculating his movements or his positions in purchasing and not purchasing, and how much money he has available. I do have a formula. I'm not gonna pull up that spreadsheet right now, but I'm just gonna look at the EPS. Okay, earning per share is at 4.3. Let's look at the analysis of the 5 years going forward. Let's see. Next 5 year 2.82%. Not the greatest. The past, I guess it had overperformed the expectations, since I see this as 6.87% the past 5 years. So that means it did pretty well. And going for the next 5 years into the future, they're predicting a 2.82%. This may even out or average out, maybe a little, probably higher than the 2.82, but that's going to be unknown till the day it actually happens. I don't know what's going on with Verizon, besides the fact that when I read that article, and obviously all the articles and the links that I touching on in this video will be in the description. I know Verizon is the parent company of Yahoo. Yahoo Finance is the one that I think they're the ones who broadcast the Berkshire Hathaway's annual meetings. So if it's a portion of that's based on that, then that's emotional ties to a company, opposed to the financial ties of it. Of course, this is just looking at the broad overview. I don't know what their debt ratio is to their profit. I don't even know what Verizon is out there doing right now. Verizon News. Are they? My capital remains hopeful despite. I'm sure there's a lot of things going behind the scenes where Verizon is constantly. I mean, they are in the news, so they're updated as of yesterday. Coast to coast winter storm update. Okay, so that has to do with Mother Nature. That has nothing to do. I don't think that has anything to do with um, investments of it. Although it, I mean, if it has a huge impact on their communications, and people are complaining, then obviously that's going to bring down the company's standing. Stocks making the biggest move in the pre-market. Chevron, Verizon. So yeah, so Chevron is another one. I don't even know what Chevron has. Chevron. Yeah, I mean, besides the fact that Warren Buffett made this move on Chevron, it hit the news even hard. I mean, you do a Google search for I typed it wrong. Chevron, and Warren Buffett's face is like occupying 2/3 of it. I mean, if he didn't make this move, would Chevron have been another just like be like what? I mean, for the older generation, we would know what that is. I remember seeing that logo everywhere, gas stations. That doesn't exist anymore. I don't know what. It says a American multinational energy corporation. Okay. I mean, a lot of digging into. So Warren is actually really bullish on the oil still. Is he not a believer in EV? Which is not the case because he does have a stake in EV as well. So maybe he's balancing it. He's almost like with his portfolio, he's almost doing like a hybrid between EVs and oil still. So, but I want to go back to this the main article on Yahoo Finance where the Wall Street Circle calls this the Buffett indicator, which takes the Wilshire 5000 index viewed as the total stock market, which is the total stock market, and divided by the annual U.S. GDP, is now at a record high amid the latest climb to records in the broader market. In doing the math, the Buffett indicator stands at about 195.7%, up sharply from 175% or so when applying third quarter GDP data. The figure is well above the 159.2 seen before the dot-com bubble. So Warren Buffett is not saying that there is a crash, unless there's other articles indicating that he is saying that. But based on the numbers, and I don't think numbers lie. Math does everything justice. If there was no math, you do not have structural and even and things of existence in proportion. Building bridges, cars, whatever. Everything requires math, right? And what about the stock market? It's constantly moving. There's no set number. It's always fluctuating. But there is a trend, right? So they're saying, as of now, it's at 195% compared to 159% back in the dot-com bubble. Granted, there's probably more things going on now than there were going in the dot-com bubble. Can I even say that? I don't know. Maybe there was probably a lot more going on in the dot-com bubble, and things have slowed down since then. But for those numbers those numbers have to be justified, right? And I would probably have to do my own math to figure out what is it that they're calculating, because I don't even know. I'm just reading it, right? So as an average reader of Yahoo Finance, you and I would do the same, click on it, read, and these numbers show up. But how do I know these numbers are? What are these numbers? Where is it coming from? How are they getting it? So that's pretty much what. So there's almost putting like a indirect Warren Buffett saying that there's going to be a crash, and at the same time building fear on people, which I believe it's going to catch on, because some a lot of people think that things are too good to be true, and so far even during the whole crisis of last year up until now, where we're still in it, people are still like spending and hopeful, even though unemployment rate is going up. People losing their jobs, and companies are shutting down because there's not enough business to sustain itself. So that's really interesting that this is happening. So let's click on the Buffett indicator, which is pretty cool. I wish there was just a button that you can press and see if today's a good day or a bad day, right? Has all the calculation in this like Raspberry Pi or something. That would be cool. I should build one actually. The Buffett indicator rose to fame after a 2001 Fortune magazine article written by Buffett and longtime Fortune writer and Buffett insider Carl Loomis. The ratio has certain limitations telling you what you need to know. Still, is probably the best single measure of where valuation stands at any given moment, explained Buffett in the article. Pretty cool. So he pretty much has a single math equation to analyze the whole market and economy, which is awesome, right? I mean, imagine I just say I want to add these two numbers together, stock market prices and the GDP, and then boom, you have a percentage, and you can kind of predict if we're in a bubble or not. That's amazing. Of course, a lot of things plays out. I don't know if it's gonna be a big burst. Like, .com was like so dense. It was so concentrated. When it burst, things trickle down like crazy. I'm not sure if that's gonna happen again now. Like, let's just say, for instance, one major company. I mean, okay, so unless the situation that we're in now with the pandemic gets uncontrollable, meaning it resurfaces and it goes back and we're all in lockdown again, I could see something happening, right? Because then commercial businesses, storefronts, they're gonna lose all that business again, and the government's not gonna. I highly doubt they would feed all those individuals, all the businesses, and the money, keep on pumping the money out, because they already did it once, twice, maybe 3 times now. Not just the average mom and pop, but the big corporations, and also the taxpayers, us. So in order, if the government does that again, inflation goes crazy off the mark, which is already is off the mark, then I can see everything collapsing, right? But on the end scale of it, Amazon's still going to do great, because it is providing necessities, not just your Prime and all that movie stuff, and Amazon Prime and the movies, Netflix, all that. They will do well, right? Because you're home, you have nothing else, you have no other choice. That's your go-to entertainment. But dine-in restaurants, your local stores. If you're in lockdown, you're worried about going out, you may not go and get your local groceries opposed to having them delivered. But most grocery stores, they're gonna survive, because that's a necessity. But what about cars? Like, let's just say that happens and you're not driving as much. What's gonna happen with Tesla, right? What's gonna happen with any car maker, to be honest? And then if the auto industry fails, maybe it's an auto industry failure, opposed to a real estate boom and then a real estate crash back in like 2008, opposed to the internet crash of like 2000-ish, right? It was 2000 some, around there. So it may take on a different bubble. I mean, we're seeing a lot of prices go off the charts, and that's just my prediction. That's just my analysis. So in short, Warren Buffett and his formula is seeing something, and in short, do not be surprised that if something was to burst at any given moment, because we just don't know. So what does that mean for an average investor like myself, and whoever else is watching this with me? Um, I say keep some money on the side. Don't throw everything into any investments where you normally would. And that meaning if you have cash on standby that you were going to make an investment purchases with, or throwing additional money into the stock market because you felt, because you're seeing everything go up and you want to jump on Bitcoin as well, and you want to jump on, buying Apple stocks. I'm not saying don't do it. I'm saying do a percentage less than what you normally would have done. So if you were going to take your paycheck or whatever savings you have, and you were going to put an additional $1,000 into, let's just say Apple stocks, back it off a little bit. Maybe put in 600 or 700. Save 30% of it or 20%, whatever you feel comfortable with. And let the remaining percentage that you did not invest into the market, put that aside for a rainy day. Because, unless your job is guaranteed and stable, that has to be your priority, is to have additional cash. Because especially if you have kids, if you have a family, you can't afford to start putting everything into an investment, because an investment is not always guaranteed, and there could be downsides to an investment if something was to happen. Stock market would be if the stock prices go down tremendously. In real estate, depreciation of or people not being able to rent or pay the rent, and then you come up with empty rent each month, and you have to do an eviction, and then it's difficult during this time of the pandemic. And also maybe even starting a business, because you can't just start a business and expect it to be profitable right off the bat. You definitely have to have customers, and you have to market yourself, and you have to do the work. So I would say, in general, all this, if you have money, if you're still working, and even if you're not working and you're collecting unemployment, save for that rainy day, at least until we pass this, which is the most crucial, is once we pass this. I think once we pass this, we are good. But, saving and keeping extra funds is always a necessity. It's, we have to eat, we have to buy certain things to survive, but not buy everything that we, just because we want it. So hold off on buying that new iPhone. But if you do hold off on buying that new iPhone, you can put some of it into buying the Apple stock, and maybe that the returns on that will get you a new iPhone for the next generation, meaning the next release of the iPhone. All right, thank you guys, appreciate it. See you guys again soon. Bye.